Welcome back to the Versus series, where today we're going to uncover the best dividend-paying stock in the consumer discretionary sector. Both of these companies have made it all the way through the bracket, so it's only natural that here at the end, they battle it out for the right to be the best. The winner will be the stock with the most points out of 10 possible points and revealed at the end of the episode. Now let's remember to hit that like button to support the channel and get a reminder on the episode criteria. Feel free to pause the video right here to get a good look at the episode criteria, but without further ado, let's meet our competitors. Standing over here in the red corner, we have Winmark, stock ticker WINA, and they are a company within the specialty stores sub-industry, within the specialty retail industry, all within consumer discretionary sector. Winmark was founded in 1988 and is a franchisor of retail store concepts that buys, sell, trade, and consign used merchandise primarily in the United States and Canada. It franchises retail stores operating under the Plato's Closet, Once Upon a Child, Play It Again Sports, Style Encore, and Music Go Round brand names. And standing over here in the blue corner, we have LCI Industries, stock ticker LCII. LCII is a company within the auto parts and equipment sub-industry, within the auto components industry, all within consumer discretionary sector. Founded in 1984, LCII manufactures and supplies components for the manufacturers of recreational vehicles and adjacent industries in the United States and internationally. It operates in two segments: original equipment manufacturers, OEM, and the aftermarket. The company was formerly known as Drew Industries Incorporated and changed its name to LCI Industries in December of 2016. Let's shuffle the companies up and dive right into the market cap. You guys will see right here that Company A has a market cap of $3.05 billion, while Company B brings in a market cap of $691.48 million. Here's your visual representation comparing Company A to Company B in market cap, and you can see Company A significantly larger. But that doesn't mean they're always going to win, so let's dive into the numbers. Now we're going to dive into growth. You guys will see right here that Company A has a revenue year-over-year growth of 63.13%, while Company B brings in 20.4%. Company A has a revenue 3-year CAGR of 28.4% compared to the 3.08% for Company B, giving the point to Company A, and bringing your current score of 2 points for Company A, 0 points for Company B. Next category is profitability, and Company A has a gross profit margin of 24.73%, and Company B boasts a gross profit margin of 94.08%, giving the point to Company B, and bringing your score 2 points for Company A, 1 point for Company B. Next category is momentum, specifically the percentage off of the 52-week high. Keeping in mind we're trying to go for the biggest discount here. Company A had a 52-week high of $163.33 with a current price of $119.88, bringing them 27% off of their all-time high, while Company B had a 52-week high of $277.99 and a current price of $201.52, bringing them 28% off of their all-time high and giving them the point for this category, which evens up your score at 2 points for Company A, 2 points for Company B. And last but certainly not least, the last category is dividends. You guys will see right here that Company A has a forward dividend yield of 3.5% compared to the 1.4% from Company B, giving the point to Company A. Company A has a forward annual payout of $4.20 compared to the $2.80 forward annual payout for Company B, another point for Company A. Company A had a payout ratio of 22.34%, and I could not find via Seeking Alpha or Dividend.com a payout ratio for Company B, thus giving the point to Company A. Now, the one-year dividend growth rate for Company A was a very impressive 23.21%, but Company B had a one-year dividend growth rate of 139.47%, which is even more impressive, giving them the point. 5-year dividend growth rate for Company A, again, another impressive 19.77%, but an even more impressive 5-year dividend growth rate of 89.74% for Company B, giving them the point. And there was not a 10-year dividend growth rate for Company A, but there was a 10-year dividend growth rate of 55.51% for Company B, giving them the point here. And if you're good at math and or paying attention, you can already tell for the second time in a row, we have another tiebreaker. So this is now our second versus episode uncovering the sector king, and with a score of 5 points each, it would have resulted in another tie, and we cannot have that. So let's take both of these companies over to dividendchannel.com to compare their returns over the last 10 years to the S&P 500 to see who comes out with the crown. All right, looking here at Company A first, we have a 457.93% total return over the last 10 years for Company A, and that is compared to the 247.66% for the S&P 500, which equates to an 18.76% average annual return for Company A, while the S&P brings back 13.27% average annualized return over the last 10 years. $10,000 invested in Company A would have brought you back $55,808.70 while only reinvesting dividends since then, compared to the $34,765.54 of the S&P. Pretty good numbers. Let's see if Company B can compete. So you guys will see here that Company B had brought back 313.63%, again compared to the 247.66% from the S&P 500, so it outperforms the S&P, with a 15.26% average annual return compared to the 13.27% from the S&P. A $10,000 investment in Company B would have brought you back $41,379.59 in 10 years while only reinvesting dividends, compared to the $34,765.54 you get from the S&P. And the winner by way of tiebreaker is Company A. And the moment you guys have all been waiting for, Company A is actually LCI Industries. So both of these companies over the last 10 years have actually beat the S&P 500, which is something that I look for as an investor in individual stocks. Again, and always remember that these results are subject to the metrics I used and the date and time I completed my research. But with that being said, LCI Industries has proven to be the best dividend stock in the consumer discretionary sector. So if you're a little underweight in the consumer discretionary sector and looking for a place to start your research, this might be a good place for you. In my last video, I actually detailed the best dividend paying stock in the communication services sector. If you guys are interested in that, make sure you guys click up here. But until next time, see you.